Yo, stock slingers and semiconductor sleuths, this Wolfspeed wipeout is a Wall Street whirlwind. It's Area 72, your high-stakes war room for market meltdowns, equity escapes, and corporate curveballs that turn billion-dollar deals into busts. Today, we're ripping into Wolfspeed's shocking September 28, 2025 bombshell, the chip giant yanking its $750 million stock offering amid a brutal restructuring blitz, slashing 25% of its workforce, shuttering fabs, and tanking shares 15% in a move that's got investors reeling and analysts roaring. If this silicon setback has you second-guessing your tech portfolio, smash that like button, slam subscribe, and crank those notifications. We're dropping these explosive breakdowns to supercharge your finance feed and stack those watch hours. Let's timeline the turmoil, unpack the purge, and sling a prediction that'll spark debates. Comment now, buy the dip or bail? Let's chip in, full throttle, flash to the fiscal fiasco. September 28, 2025, Wolfspeed, Wolf, the North Carolina-based silicon carbide powerhouse, pulls the plug on its proposed $750 million common stock sale, announced just weeks earlier to fund expansion amid EV chip demand. The cancellation comes as the company dives into a comprehensive restructuring to slash costs by $200 million annually, closing its Durham fab by mid-2026, shuttering New York facilities, and axing 25% of its 5,000-strong workforce, about 1,250 jobs, by year-end. Shares crater 15% to $15.50 in after-hours trading, wiping $300 million in market cap from the $1.2 billion company. CEO Greg Lowe drops the hammer in a statement. These actions are necessary to position Wolfspeed for long-term success and align with our strategic priorities. X detonates, hashtag Wolfspeed restructuring trends with 500k plus views, traders venting, chip dreams dashed, memes. Fun fact, Wolfspeed silicon carbide tech powers EVs and renewables, but Q2 losses of $285 million, versus $96 million profit last year, and $2.7 billion debt load forced the pivot. Like if you're feeling the fallout, comment your Wolf Watch, the purge unpacked, the $750 million offering, filed under shelf registration, aimed to fuel Mohawk Valley fab expansions for 200mm wafers, but market jitters, EV slowdowns, China trade wars, nixed it. Restructuring details? Durham's 150mm line winds down by Q2 2026, New York's R&D hub closes, and 1,250 layoffs hit across ops, cost savings $200 million per year starting FY26. Lowe spins it, streamlining our footprint to focus on high-volume production and customer commitments. Analyst reactions? Wolf Research's Chris Caso, necessary but painful, debt reduction key, but execution risks high. Barclays' Mark Delaney, buy the dip, EV rebound in 26 justifies $20 target. Shares? Down 15% to $15.50, but up 10% pre-announce on Fab News. Broader stakes? Silicon carbide's $10 billion market grows 30% CAGR, but Wolfspeed's 20% share slips amid Infineon slash on semi-pressure, restructuring buys time or signals trouble? Share this silicon shake, let's stack the takes, stakes sky high. Wolfspeed's $2.7 billion debt and $285 million Q2 loss scream survival mode. Restructuring saves $200 million but risks talent flight and customer churn. Prediction, shares rebound 25% to $19 by Q1 26 on EV recovery, $750m alternative financing via bonds, Mohawk fab hits 20% capacity. Upside? Cost cuts fuel profitability. Downside? If layoffs lag, debt balloons. Twist? Trump tariffs boost U.S. chips, Wolfspeed snags $500 million DoD contract, that's your Wolfspeed restructuring rumble. If this chipped your charts, like, subscribe, bell on, next tech tumble. Comment your dip dive, share the stakes. Thanks for investing with Area 72, stay structured, stay soaring. Hashtag SETHJTV.